Welcome back to Explain the Charts. Today is April 8th, 2025, and we're going to analyze the SPY, the S&P 500 ETF, in light of current market events. The market's been a roller coaster due to Trump's tariffs, so let's dive into the charts and see what's going on. First, let's take a look at the one-day chart of SPY to get a broad overview of the recent price action. Recent news indicates extreme volatility, with the market experiencing roller coaster rides due to tariff concerns. Reports show the S&P 500 narrowly avoided bear market territory yesterday, but the situation remains tense. We can see this recent volatility reflected in the most recent candles on the daily chart, with large swings in price action. Now, let's zoom into the one-hour chart for a closer look at the more recent price movements. This shorter time frame will give us a better understanding of the immediate impact of the tariff news and market sentiment. Looking at the one-hour chart, we can see significant selling pressure leading into today, followed by a slight recovery. This suggests some bargain hunters are stepping in, but the overall trend still appears bearish. The news articles mention potential for a recession and the market dipping, so it's definitely possible this dip has further to go. Let's examine the candles from April 3rd onwards to analyze the effects of this recent market crash. On the 15-minute chart, we observe more granular price fluctuations within today's trading session. The initial sell-off was quite aggressive, followed by periods of consolidation and attempted rallies. Key price levels to watch in the short term are around 500 as a psychological level, and then previous lows around 480 as areas of potential support. Let's zoom in further to get a better understanding of current price action. Zooming in on the most recent candles using the 15-minute time frame, we can analyze what has happened in today's trading. Currently, we see a bit of a rally, attempting to gain back some ground from the lows of this morning. However, it is too soon to determine whether this is a temporary bounce or a genuine trend reversal. It's definitely possible this dip will continue, or that the price will continue around where it is, or potentially move upward. The market conditions and news is shifting quickly, so it's hard to gauge which is most likely. In recap, crucial price levels to watch are 480, serving as key support, and then 500 as a major psychological level, which seems likely to be tested. Given the current volatile climate and the potential for a recession, a retest of February lows seems plausible, with perhaps a 40% chance, especially if Trump continues his aggressive tariff policies. Upside scenarios remain dependent on a de-escalation of the trade war, and if there is a softening of his stance, we could see price move back upward to the 520 to 540 range again. However, this is unlikely unless there's some type of major shift in the news. Keep an eye on news regarding Trump's tariff decisions, as these will be the biggest drivers of the SPY's price action in the coming days. Thanks for watching Explain the Charts.